Hi everyone, welcome to the SmartCharts European session. Hope you're all well. Alright, so we are coming into the higher impact news announcement of the week, the US Consumer Price Index Consumer Price Inflation Report. This will be released at 1:30 p.m. GMT, and it measures the change in the price of goods and services purchased by consumers. It's released monthly, usually around 16 days after the month ends. Consumer prices account for the majority of overall inflation, which is used by central banks to determine interest rate policy. The headline year-on-year rate is expected to rise from 2.7 to 2.9%. Now, interest rates are a big deal, okay, when it comes to currency trading, because quite simply what you'll find is when inflation is rising, okay, central banks tend to increase interest rates to get people to spend less in the economy, just to bring prices down a little bit. They do this by increasing interest rates to make borrowing a little bit more expensive, to get people to save a little bit more in interest rate accounts. When inflation is falling, central banks tend to cut interest rates to get people to spend more in the economy and to get economic activity picking back up. So it's a bit of a balancing act from the central banks. Now remember, it's not about where the economy is now per se, it's more about where the central bank expects the economy to be in the future. And that becomes very important because we know the market moves on the anticipation of future events. Okay, so the market likes, or the stock market likes lower interest rates. Okay, we tend to see a big rally in stock markets when central banks are forecasted to sort of cut interest rates or keep them low, because it can help corporate profitability. People can borrow more money, businesses, consumers can borrow more money cheaply and help the economy to grow. Okay. But again, in this instance, we've had a bit of a mixed data. We had a really strong jobs report last week, which paired back the possibility of interest rate cuts because the economy is actually doing, very well. Strong economy there. They don't need to cut interest rates further. But we did have a lower than expected PPI report there yesterday. So we're starting to get some mixed data here. And because of that, we're expecting lots of high volatility this afternoon. In fact, if you any options traders, okay, the options market is actually pricing in a 1% move in the S&P 500 stock market index, which is an index of the largest 500 shares listed on the New York Stock Exchange. A 1% move in either direction, to the upside or to the downside. Now that will be the biggest move that index has seen since last year, 2 years ago actually, March 2023, when we had the regional banking crisis in the US, the fears of different banks going bust. So the volatility is expected to be very high, so just be mindful. Risk management, you might be lowering risk today in front of that news announcement just to manage the risk, maybe using wider entries and stop losses to give the market a little bit more room to move around. Okay, so just be mindful of the volatility. Now again, we look at news announcements not so we can predict where the market could go and try to get in early. Of course it's impossible, right? No one can predict the future, all right? But we look at news announcements for risk management, making sure that we're managing risk first and foremost. We don't have too much overexposure on the trading accounts. And also we look for any surprises. Okay, if the market gets surprised, then that's where we can see bigger moves, bigger adjustment of positions. That might lead to trading opportunities. We don't know, we've got to be prepared. Okay, that's our job as traders, to identify all the different clues the market is presenting to us. And again, traders use different things. They look at fundamentals, they look at news failures. Does the market go in a different direction to what is expected? They look at sentiment, they look at technical analysis indicators, chart patterns. There's lots of different things. Okay, so the key is about putting all those clues in our favor, and then just consistently turning that over a period of time to get a statistical edge working in our favor. Let's dive into SmartCharts and see what's actually going on, because obviously one of the benefits of SmartCharts is that it actually finds a lot of clues on our behalf. Okay, a lot of different tools, resources and strategies that helps identify a lot of clues on our behalf which helps us to identify potential opportunities a little bit easier. All right, so let's dive in and see what's going on there. Okay, so if we look at the tools tab here, so something that we have been highlighting, the Canadian dollar has been one of the strongest currencies this week, hasn't it? It's consistently been in the green every day this week here. And we did highlight that at the beginning of the week, strengthen the Canadian dollar because of the rise in oil prices, and because Canada makes a lot of their income from the export of oil, you know, it tends to be a bit of a correlation there. So we have been trading a lot of that. We had the trade there on Canadian yen on the phase changer. We looked at that last night, so we took that in the European session yesterday. We reviewed it last night in Asia session. We scaled out the trade actually, so we banked 50% of the profit on the move, and then we moved the stop to break even, and then, you know, the second part of the trade got stopped out at break even yesterday. But we went through that in the Asia session, how we were managing that because of the volatility of today. So actually that worked out quite well with the overnight flows that we saw. So we banked a little bit off the move, so that was good. You can watch the Asia session video and catch up with that if you want to. Of course, all the recordings and webinars, all that kind of stuff, in your learn section of SmartCharts. Okay. And we can also see that the US dollar has been consistently weak this week as well, and that has been a big change because over the past several months the US dollar has been consistently strong. You know, it's been over here in the green for many months. Okay, so we did highlight, okay, we're looking for potential trend continuations on the faster time frame if the move does continue, but on the medium to higher time frames, looking for those trend reversals. Okay, and we've had a few trend reversals there, the bull reversal this week as well. So again, you know, by utilizing the currency strength index, it just gives us a broader insight in terms of where the flows are in the market. What are people buying? What are people selling right now? Okay, so it gives us a bit of an edge before we even look at the chart and actually look at any other technical clues. All right, and so let's see how this fares as the week unfolds and after the volatility of this US consumer price inflation report today at 1:30 p.m. all right, but we still want to be pairing up strong currencies against weak currencies. You know, we want to be buying the strong currencies, we want to be selling the weak currencies, and trying to pair those together. Okay, so really we're still focused on the Canadian dollar. You know, still a relatively strong currency. We've had some good trends in the Canadian dollar, and if we go to the charts tab here, and if we go to the market breakout strategy here and look at EuroCAD, there's some interesting things going on. So first of all, the market breakout strategy, very versatile strategy, helps identify and trade different types of market conditions just from one chart. And again, you've got many different strategies inside of SmartCharts to help you identify and trade different types of situations developing in the market. Now this strategy utilizes moving averages, the yellow line and the blue line, and moving averages just give you a smooth line of price direction, okay, and useful in helping to understand or confirm the trend bias of the market. And it also utilizes fractals, which are little green and red chevrons on the chart, which aim to replicate turning points. Now, on top of what SmartCharts is finding for us, okay, how it's filtering, you know, all the list of different markets available to trade on here, okay, and if you're not familiar with how SmartCharts is helping you, make sure you're reviewing all your e-learning materials in the Learn section of SmartCharts. Make sure you're attending all your online classes, workshops, live training boot camps, webinars for your live events tab, and make sure you're attending all your coaching sessions, okay, so you can review all your performance data in your journal so your coach and mentor can start tailoring and customizing your trading plans to your strengths and weaknesses. All right, so make sure you're utilizing all those tools there inside of SmartCharts. But on top of what SmartCharts is doing, we just look for an extra couple of things. Okay, so we have a simple checklist we follow. So on your trading certification program, you know, we go through what the checklist is, and because literally every time we turn up, we can use a simple checklist, but then we can use that on strategies to help cover a variety of different trends, momentum trends, long-term trends, short-term trends, complex trends, many other types as well, super cycle trends. So we can use that same checklist to cover a variety of different trends across a variety of different asset classes, as well as a variety of different time frames. So by utilizing the power of algorithmic technology, we can just have a very simple focus on doing just literally one or two things well, but apply that on many different things, so we can be in the opportunity flow, which is an absolute game changer in finding consistency in the market. Also, because we already know what we want to see before we turn up, we can then take that focus and train and condition ourselves every single week to build the belief and the confidence in turning up and following the plan and listening to the market and trusting ourselves with the back testing or forward testing work that we do on your day 3 of your Trader Certification Learn Forex program, right? So in the way you're running your trading business, okay, the consistency that you can achieve is simply unrivaled. All right. Now, the key is that everything's still getting done, but we're just leveraging the power of technology to help us have more of a focus, so then we can thrive in what is a performance game. Because remember, in any performance related field, the person with the highest level of focus is the one that gets the highest level of results. So there's a couple of things that I like to look for. The first thing, I want to be in the moving average zone. So what is a moving average zone? Moving average zone is being on the yellow line, on the blue line, anywhere in between that is fine. Why? Because it just gives me a focus. I can say, well, okay, sellers have been turning up in this moving average zone before. Or look, buyers have been turning up in this moving average zone before. Okay, maybe they could turn up here again. All right. So it just gives me a focus to keep an eye out on. Buyers and sellers turn up here before, maybe they can turn up here again. Second thing is, I want to also see some resistance and support, some kind of visible areas on the chart where I can see, oh, okay, I can see sellers could turn up here as well, because I can see they've been turning up here before. So this could be different things, okay? You can use other indicators like pivot points, continuation divergences, fib retracement levels. For me, I like to keep it simple. I can see here, I've got this angle of price. Sellers have been turning up on this angle of price before, so maybe they can actually turn up here again today, okay? You can use horizontal levels, this previous low point, okay? So the market turned at this low point here and finally broke through, maybe it's going to turn on the other side, all right? So you can use different ones, you can use all of them, a few of them, a combination of them. So what we have in this instance then is a confluence of resistance areas where sellers may decide to turn up and continue a move. All right. So on top of helping to identify potential opportunities, it will also help to do the risk management side. If we click the down icon, populate an entry price of the blue dot, stop loss of the red dot, target the green dot, which can all be adjusted according to your own user preferences. And I like to set an expiry here, so on this particular strategy, so we'll give it a bit of time, really up until sort of the news announcement that's coming out a little bit later on. So we'll give it maybe like 6 hours or something like that, decline or accept the trade. All right. Now, typically we would like to go for entry prices that are a little bit closer so we can try and get the higher reward to risk, but I don't mind having a bit more of a wider entry here because the volatility market is a bit higher right now. We're expecting higher volatility later on with the news announcement. I don't mind having a bit of an entry and a bit of a stop loss, a little bit wider just to deal with the volatility, okay? But then usually we'll go for closer look entries and stops, so then it doesn't have to go too far to get to the target level, the green dots on the chart, okay? But again, it's about adapting to the situation you're in right now, okay? All right, so look, that is it from me, okay? Make sure you're tuning into all the other live trading webinars happening throughout the course of today. Make sure you're interacting with all the live traders. If you're seeing any opportunities, you know, let them know. We'll talk about it, discuss it, you know, with all the other remote traders inside of logged into the webinar, looking for opportunities, and maybe help you to identify other trading opportunities that you may not have been able to identify yourself. So make sure you're tuning in to all those other live trading sessions. For now, that's it from me. I'm going to wish you all the best for your trading. Speak to you next time.